Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on the euro currency. So here we probably could prepare just minor update on the situation because everything we mostly have said recently. Yesterday, despite the positive performance in the beginning of the session, we have talked about the XOP on intraday charts that should be reached before we will consider taking the long position. And besides, the reaching of the intraday XOP stands in agreement with the idea of the possible grabber right there on the daily chart. So you can see just at the eve of the Fed meeting, euro is flirting with the MACD predictor line, and this is one of the important moments for the bulls. So to consider taking the long position, we need to get the grabber. That will be perfect. And currently, as market already is testing the MACD line, it means that, well, it could be formed. And second, we prefer to see that trend remains bullish, which is actually falling from the idea of the grabber. That's important things for the bulls. We need to keep an eye on. Obviously, this could happen only if Jerome Powell gives some hints on the possible slowdown of the rate hiking cycle or something of that sort. That could support euro. That's what we have on the daily. On the 4-hour time frame chart, market stands at the confluence, which is really great. And well, this support is absolutely, well, perfect for bullish context. So market shows the pullback, it has reached the confluence, standing right there. Actually, it has completed the butterfly target as well, as I said. So minimum target will be around the 30% support from the A point, stands slightly above, but very close to this level. So minimum target with the butterfly is completed. And theoretically, if market remains bullish, there's nothing prevented from the starting upward action and reestablish upward action. If it will not do this here and will break it down, well, it will tell you that market probably is not as bullish. And we should be ready for downward continuation. This is important. Finally, on the hourly chart, take a look what has happened. Market recently has collapsed. It was growing in the session, but close to the end of the day, it has been dropped. And mostly we could say that XOP target is completed. So maybe not quite, but very close. This XOP also creates an agreement with the confluence. So this is a very strong level. As you understand, if market normally bullish, it should use this level as a background for starting the upward action. So what we could do currently, if you would like to trade, by the way, here is also minor divergence, as you can see with these bottoms. There are two ways actually to act. First is waiting for the patterns. I mean the grabber on the daily, and probably it makes sense to wait for something here on the hourly chart, because as you understand, this performance is not the reversal yet and no pattern has been formed. Besides recent collapse, it is not really a good sign for a bullish background, and from that standpoint it is preferable to wait for some response, to wait for appearing of the bullish patterns before taking position, at least to get the grabber on the daily. At the same time, we understand that action in the nearest few sessions will be driven mostly by external factors, which is Fed, non-farm payrolls, and something of that sort. So from that standpoint, the action probably will be very fast and sharp, and in chances that we exist that we will not get the patterns, so market will just not have a lot of significant time to create them. And from that standpoint, the second approach, probably you could try to anticipate upward action with the placing stop somewhere below the confluence on the 4-hour time frame chart right there, right? But well, this is a bit risky, guys, because volatility might be significant and you could be just washed out occasionally, although the overall context on the market maybe will not change. But this always happens when we are dealing with a major statistics report, major fundamental reports. But in general, you could try with the placing stop somewhere below the confluence. and controlling appearing of the grubber. So if you will wake up tomorrow morning and you will see that we do not have any grubber, in this case you will have to close the position probably, or somehow manage it as you would like to. But well, that's important. Personally, as I'm more conservative, I prefer to wait and get the patterns. Maybe I'll get a bit worse price entering, or maybe I will not be in time at all. But it's just some kind of the psychological issue. Mentality for a trader is very personal, and you need to do as you're more comfortable to you. If you are noisy enough and you're sitting on the hands and be nervous that you could miss the trade and that disturbs you, from that standpoint it would be better if you will just take the position and forget about it. So this is very personal, guys, and that's why the choice is up to you. But in general, overall situation stands like this. So we need to overall preparation for bullish reversal are done already. So everything stands in place. We need to get just the patterns, and if your currency is indeed bullish, it should turn up right from here. If it will not turn, it means that it is not bullish. So let's see what we will get as a result of today's Fed meeting.